Welcome back to SSCPA Tax Educate. I am Dr. S, CPA, founder and principal of SSCPA Consulting LLC, and I am thrilled you're here learning with us today. If you have not already, join this SSCPA family by liking, subscribing, and sharing this podcast with your friends and family. Let's grow this community of empowered, informed taxpayers together. Last week, we kicked off our deep dive into tariffs, and today we're keeping that momentum going. Remember, you can send us your questions anytime right here in our comment sections or through our website at sscpaconsultingllc.com. That's sscpaconsultingllc.com. We'll feature your questions in our short clip episodes on Facebook, Instagram, TikTok, etc., and we'll answer them in upcoming full episodes as needed. Hot topics. What are some of the hot topics in today's world related to tariffs? Tariffs are basically making headlines, and it's the wave right now. There have been some big news, big moves and news on tariffs. So on June 7th, for example, just a few days ago, the United States government announced plans to cut tariffs on agricultural and industrial equipment, and they're cutting that from the current 25% down to 15%. And that's not all. They're also expanding a list of industrial equipment that falls under the 15% rate, now covering items like mobile equipment, bulldozers, forklifts. And notice these are related to farming a lot because the farmers are literally suffering right now. Plus, foreign companies can now qualify, if they can, for a 10% tariff rate if their capital equipment contains, and this is important, at least 85% US made steel or aluminum by weight. This is a notable drop from the previous 95% requirement, which will help out our farmers a lot. And while the tariff debate is as heated as ever, reductions like these are a win for farmers and ultimately for taxpayers. For example, Bill Peterson, who is a senior analyst for metals and mining at JP Morgan, he kind of summed it up perfectly. He said these changes could help lower the price of food, and we say yay, and other goods while supporting our farmers, construction workers, and construction industry in general, logistics industry, and the manufacturing industries. They rely on equipment that we described prior, and they look at currently treated as steel or aluminum derivatives. So that will help. This 85%, this reduction of 10% from 95 to 85 will definitely help. So that is one of the most important and, to me, really happy news for taxpayers and our consumers in general. So let's get into our main lesson for this week. The tariff debacle and how it affects taxpayers, shall we? So we're going to review quickly what we looked at last week. If you have not yet had an opportunity to review that podcast from last week, please do so, and that will give you a bit of an overview, get you caught up on the foundation of tariffs. So let's quickly review that though. What are tariffs? So a tariff is a tax placed on goods importing from another country. And we said last week also that governments use tariff to first raise revenue because it is a tax, it's money coming in. That was historically the main purpose of it. And as we said in our very first premiere episode, that the United States at one point had no income tax as we know it now. So they relied heavily on tariff for revenue generation. The second reason that tariffs are enacted is to protect domestic industries by making foreign goods more expensive. Of course, that's what tariffs are. They add on to normally the price of the good, and it's a tax, so it becomes more expensive. So the hope is as foreign goods become more expensive, then of course, the manufacturers or the importers will pretty much go and try to find those same products somewhere. They may want to buy locally. And that is kind of one of the objectives of this administration, as they noted in this whole tariff debacle. They also use tariff to influence trade behavior. And that is done through negotiations or dispute negotiations. So if you think of it, think of tariffs as a price adjustment, like a little knob that the government turns to shape economic outcomes. So the president wanted to change the context of tariffs since his first administration. During 2016 to 2020, when he was the president, then his understanding of tariffs is based on his underpinnings and his beliefs. And how do I know this? Because he says it all the time. He says tariffs could or should really be implemented in lieu of the current tax system. He even went as far as to say in 2023, 24, when he was running for president and he was campaigning, he promised in a meeting that he was going to go ahead and try to get rid of the IRS. And I remember someone asking him, so, sir, does that mean we won't be paying taxes anymore? And he said, yep, because tariffs going to bring in lots and lots of money, which we know that is never going to happen. So we are discussing this whole concept of tariffs in the episodes, the first one, the one we did last week, this week, and next week. And so we think that tariffs, according to the president, will improve the U.S. trade deficit with other countries. So what is a trade deficit? A trade deficit is when a country imports more goods and services than it exports, meaning money flows out to pay foreign producers, while a trade surplus happens when a country exports more than it imports. Now, the United States does not produce as many products as we would like to believe. So we will most likely always have a trade deficit for the foreseeable future. However, with the current administration, the concepts of tariffs became a major tax issue and such a matter of contention. And it has been a debacle then, even more than it was before, since last year in 2025. So let's walk through the timeline of the current tariff debacle. How did we get here is the question. On January 20, 2025, the president was inaugurated. He immediately put in place the America First trade policy. He announced that, he implemented it. This was also born out of the 2025 plan that was put in place by others. Everybody who was an America First, MAGA, or whatever you want to call that concept. So the administration announced a sweeping tariff trade doctrine, prioritizing U.S. industrial competitiveness, and then said we want to reduce trade deficits throughout, and we want to broaden and increase tariffs. Here are some key features. There were a higher percentage of tariffs across nearly all our trading partners. Then they implemented new reciprocal tariffs. So in other words, other countries must match at a minimum the United States rate or face higher duties. Then, of course, the expansion of tariffs, according to them, for national security and emergency reasons. Then there was a massive hike in tariff, especially on China. Beginning then in September 2024 and accelerated into 25, when just before the election and right after the election, the United States imposed major tariffs. It's called a Section 301 on Chinese goods. Recall I said this has been going on for several years now, when the current administration was in their first administration between 2016 to 2020. So here's what happened with the Section 301 increase on China. Electronic vehicles moved from 25% to a whopping 100%. Solar cells, modules, etc. from 25 to 50%. Steel, aluminum, all of that went up 25%. Critical minerals, cranes from 25%, what it was before, to 100%. Fentanyl tariff. There was because you've probably heard about the fentanyl issue, which fentanyl is a drug, and a lot of people think that it is killing Americans and that it is being imported from China. So that went from a 10% on all Chinese imports in February of 2025, and they raised it to 20%. If you think about it, these measures marked a great shift from a sector specific tariff to what I am calling here a broad punitive tariff. So, punitive tariff means it's more a form of a punishment rather than an economic or even a political strategy. So, let's look at some dates. On April 2, 2025, Liberation Day is what the president called it, there was a global plan. And what happens, it was a big day for the president because he came out with all his billboards and he said, we are going to put tariffs on every country. This was the single most consequential tariff announcement ever. So what happened? He implemented a 10% universal tariff on all US imports from everywhere. Higher rates like 10 to 41% for approximately 60 countries. And you can probably think about some of the countries. Then there was a 90-day negotiation window for countries to come back. The president said, we're going to do 90 deals in 90 days. And this was for countries to come and seek lower rates by bringing something to the table to the administration. Then Section 232, which is an auto tariff, that was 25% on all auto parts that was implemented. And what happened that day, if you recall, the stock markets tanked immediately. It was the biggest loss to taxpayers because people lost money on their capital gains and all their dividends, interest, etc. And of course, people were very upset about that. Then in August 2025, the United States said, we are going to abandon the World Trade Organization most favored nation status. So the principle began and applying different tariff rates to different countries. That's kind of what was going on. Here's an example. Many developing countries, like smaller countries, now faced a 25% tariff. There was even a little anecdote where talk about this country that only, it was not even a country, it's not even populated. It just have a lot of ecosystem and birds that were tariffed as well. So that was funny. So the least developed countries were now facing a 27% plus tariff. And then the United States tariffed vulnerable economies. And they were being tariffed from small amounts like 2.8% up till 20%. So this represented a fundamental break from the 30 years the World Trade Organization, the basic norms of that. So we were breaking and busting norms everywhere. Also in August 2025, the Custom and Border Protection offered guidance on new tariff requirements. They issued an updated reinforcement rules for new tariffs where the key changes were the auto parts, like I said, 25 to 50% depending on the date you were importing, steel, aluminum, copper, 50% tariffs. China and Hong Kong was immediately hit by a 20%. And that was an increase from the International Emergency Economic Powers Act, which was enacted in 1977 and signed into law by President Jimmy Carter. So a lot of that was changed as well. Then the whole change happened where the de minimis eliminated. De minimis mean no more duty-free packages from any country. So do you recall sometimes you go to the airport and you're traveling, you decide I'm going to go into the duty-free shop and I'm going to buy my loved ones a gift and it's going to be duty-free? Well, a lot of that was eliminated. So what happened? This dramatically affects those of us who depend on e-commerce imports as it increases the cost of goods. And in the next episode, we're going to talk a little bit about how small businesses that rely on e-commerce, etc., can help to mitigate some of this, the impact. So according to the United Nations Conference on Trade and Development, tariffs have great impact on small and vulnerable countries and economies. And they report that especially reciprocal tariffs disproportionately harm least developed countries, small island states like the islands in the Caribbean, landlocked developing nations, etc. They also note that the United States is wrong in thinking that tariffs significantly reduce trade deficit. Remember, we explained what that was a few minutes ago. So they decide this is not necessarily the case. So, what does this mean going forward? The United States effectively withdrew, kind of technically took the global tariff map and just redrew it, almost like renaming the Gulf of Mexico to the Gulf of America. The biggest implications are higher consumer prices in the United States, supply chain restructuring, a lot of trade tensions with allies. If you recall, we kind of went to war, quote unquote, with our closest allies, our neighbors, Mexico, Canada. The president even suggested that Canada should become the 51st state if they don't want to be tariffed. This was really insulting to Canadians. So, as a result, Canadians began limiting their travels to the United States and they pushed back very strongly. They threatened to embargo utilities in some of our northern states that get utility from Canada, while Mexico threatened to raise tariffs on other products like food products, avocados, everything, which, of course, we wouldn't be able to eat our tacos because and have Taco Tuesdays, even though we Taco Tuesday all the time. But again, this would increase the products that we import from Mexico, and these are a lot of food, etc. There were also legal battles over the presidential tariff authority. People were saying, you do not have the authority to do this. The potential World Trade Organization disputes, the pressures that were on developing economies, it was truly what I call a tariff debacle in those first couple days. So people challenge this. And they're like, no, we're not going to stand for that. Consumers are suffering. We're still suffering. It's also a part, it's not only the war in Iran, we're suffering also from the tariff debacle. So let's talk a little bit about the legal challenges. So after Liberation Day, which was in April of 25, the Reciprocal Tariff System Coalition of Importance filed a lawsuit in the United States Court of International Trade. Now, I'm not sure how many of you know about this court, but the Court of International Trade literally, they are kind of oversee international trade, global trade, etc. between countries, and they help to resolve disputes. They noted that the president exceeded his authority under the International Emergency Powers Act, which is the IEEPA Act. Other organizations such as watchdogs, businesses, and other individuals affected by the trade also sued. So there were lawsuits coming from everywhere. These cases continued with the rulings of the Court of International Trade, the Court of Appeal, and they all ruled similarly that the broad tariff, Liberation Day, was pretty much illegal. The tariffs were illegal. Not only were they illegal, but they were also unconstitutional because they were just implemented by executive order of the president and not by the Congress. The Congress has the power of the purse in the United States. And so they also have the power to enact or not enact tariff. And so this was not under any new statute or any new laws like the one I mentioned before in 1977, signed by President Carter. This was simply the president enacted his own tariff rules and policies. Of course, the president believes and said he has broad ramifications. He can do whatever he wants or what he wishes. And the majority of this Congress, as we know it, kind of just let him do it. Some pushed back, of course, but most didn't. Finally, though, in April of 2026, almost a year later, the Supreme Court ruled, SCOTUS, the Supreme Court of the United States. Sorry. As I noted in part one, they note that tariff is simple an additional tax on all taxpayers, and that the president's order was unconstitutional. Most importantly, though, the ruling included an order that billions and billions of dollars should be refunded to the businesses that paid the tariffs. And I say hooray for taxpayers. This rule should allow consumer costs to begin to go down, should be less, hopefully, but also very importantly, I believe this ruling shows that the courts can limit the presence of presidential power when they deem it necessary and when they really want to. So, as taxpayers, we need them to be on our side. They work for all of us, we pay their salaries. Whether or not you know that, we pay salaries of everybody in Congress, of the Supreme Court, and everybody who works for us. To remind you, the president also promised that trillions of dollars were pouring in from China and other countries, which was and still is false. We never saw proof of that. He said we would give taxpayers a tariff rebate, which has never materialized. Everyone was supposed to get what, $5,000 or whatever it was, tariff rebate. Check, we never saw that. So tariffs may sound like a dry policy tool, but they do shape the cost of living. They shape what we can do as taxpayers and what we cannot do. They are taxes on us. The strength of industries and the balance of global power also depend on tariffs. So next time you see a price tag, like I said, remember, there may be a tariff behind it. And we already spoke a little bit about that in the prior episode. So, as we wrap up today's episode, I hope today's conversation helped to deepen your understanding of tariffs, what they are, why they matter, and how they influence our lives as consumers and taxpayers. This knowledge is power, and you're using it to make smarter decisions for yourselves, your family, and your business. Some of the research credits go to insights from trusted sources like the United Nations on trade and development, the World Trade Organization, Bloomberg, JP Morgan, several other reputable economic institutions. Be sure to join us next week for part 3, which is the final episode. May or may not. We may have to do another episode depending on what happens later in this year. But it may be the final episode for now in our Tariff Debacle series. So the next time we are going to talk about how businesses, especially small businesses, can prepare for and navigate the ongoing tariff challenge. You don't want to miss it. And as always, remember to like, subscribe, share, and drop your questions in the comment section. Your engagement helps us grow this educational platform, and it helps us to continue to empower our community with clear, practical tax knowledge. Thank you.